Welcome back to Closing Bell on the 14th of December on a Monday. Three key stocks that I want to share today is going to be Neo, Nintendo and Alibaba. I've been doing lots of charting, so I thought I'll share my findings with everyone. So Neo stocks on a decline as low as 38, 39, and it bounced up really quick. So quick that I couldn't even grab it, but I managed to grab some at around about 39.8. So I've gone back into Neo, I've sold it to profit, I've gone back in again on the flow. Why? Why did I do that? Because I think the level $40 per share, it's a super strong resistance. I mean, worst case, I've plotted my Fibonacci retracement method. Worst case, that if it does break through that floor, the next two floor downs will be 38 and 32. So I'll call it my trigger buy. First buy at 40, second buy at 38, and third buy at 32. I'll just straight up front tell you guys, I bought it at 39, 38 already. So what's going to happen next? It's testing the resistance again for the second time in the last 3 weeks. And I think the next thing is going to be reward to risk ratio. It's just going to go up. That's what I see next. It's going to go up strong. How high it's going to go, we don't know. But the objective for the next ceiling is trying to test the resistance at the 55, 53 level. That's the resistance of the last peak. It's trying to break out. But there's no real reason for it to break out just now. So potentially we could fall down and retest support 42 and then retest support 40 again. And then for more good news, perhaps after Chinese New Year, March, April, it takes time for it to rebound. So I think the demand will grow and loads of government incentives. So I'm quite bullish on the case. I know that Neo is overpriced, but as an investor, we should be playing with the support and ceiling level rather than just buy that we think it's nice and buy with every amount of money on the technology. So that's me on Neo. I've spoken a lot on Neo, but next I would like to speak about Nintendo, Super Mario and his friends. So second time again, speaking of Nintendo, like what, in the last 10 days. So it finally broke its support line at 72. Now it's gone at 75. It's gone away. After 3 attempts, and on the 4th attempt it's broken up and it's all the way upwards. So it's trying its new floors now at 75. Maybe it'll stay, but I think it'll be, when I say breakout means on the way upwards towards 80. So it's too late to buy. I think everybody should have bought at 68 previously, and if you buy at 75, your risk reward is just too much to fall if it does fall. So as it stands, it should be heading towards 80. Why? Because of Christmas sales. Video games, Christmas sales, la. It's the obvious reason. These are the best time that video games are selling at this point. Regardless, PlayStation 5 or Xbox are running out of stocks, but Switch is something that every 8 to 24-year-olds still want to own, and people don't mind owning a Switch and also a PlayStation 5, 6, whatever they call it. So I think Nintendo is great to hold. I'm holding on my eToro. If I do buy again, I'll buy at 68. But I'm glad I topped it up a couple of weeks ago. So that's me on Nintendo. Very bullish. Anybody who owns it, just hold it. Hold it. Anybody who defies me that Nintendo is not bullish, fine, go ahead. You're missing the boat. Okay, next one is Alibaba. I'm talking about Alibaba today because Financial Times released an article out today. So Alibaba has been slapped on the wrist and they've been fined by the government. More details came out. I thought that we have to wait until maybe Chinese New Year in February to find out more, but no, they actually got 76,000 K fine. That includes Tencent as well. And the reason is because, you know, Alibaba and Tencent has 10 years of unregulated growth. They've been growing. The government has not really minded business. Let them do whatever they want. But there have been rules in place they should have followed. They've got this thing called the VIE, variable intent entity. So this is like a platform that whatever they do, if they grow a certain size or if they take over anyone or any merger, they need to inform the regulation body or the government. But they've not been doing it, they've been abusing it. So they've been abusing it by taking investment outside of the country, and also they've been bringing other foreign investments, affiliation or partnership, Google, Facebook, into the country unregulated, but going through Alibaba or going through Tencent's protocol. So that's not great. They got fined and the government's putting a stance on it. But again, no bad news about Baba breakup, no bad news about US delisting Baba. So I think we're at a point where things might look a bit more rosy, a bit more happier, a bit more positive sentiment for Baba. Maybe not tomorrow, maybe not next week, maybe perhaps in January, maybe perhaps in February. But I think we're sitting at a very strong floor. So going to the technicals, the multiples for Alibaba just now. Multiples before COVID-19 is around about 7, and now we're sitting about 5.5. So Alibaba is superbly undervalued for where it is. And at this chart here that I've plotted out, so strong support at $250 per share, super strong support. I don't see how it's going to break through unless this drags on for a long time. But no, the regulation has slapped the fines already, so it's not going to go beyond March. So it might slowly dissolve away. So the next ceiling to break from 250 is 275. So if you're an investor, you're already invested in Alibaba. I said before, don't buy. But if you want to top up, maybe top up round about now. And the real time to buy is if the ceiling break at 275, if the momentum, if you see a big indicator, a big buy-in, big volume, people confident to buy in, hitting 275, then from 275 onward, you should be buying on momentum. That's how the traders, option traders will be doing. So that's the confidence point. Is still not over yet, but once it hit 275, buy on momentum. And the next ceiling to hit is 300. 300 will be the ceiling, and we have to see how Ant Financial do before they break away from 300, because anything above 300 is where the Ant Financial euphoria comes in. So if Ant Financial doesn't get listed, there's no point hitting 300. We have to see how Baba expands on other bases, maybe with the health center, or maybe with the brick and mortar shops. So, you know, there's we still can swing this. If you want to hold long-term Alibaba, I know some people have got that. I know I've got 75% holdings in top 3 stocks, and Alibaba is one of them. And you know, if you own tons, just hold on. But I think there's good news to come before the Chinese New Year in January, February period, that we might see a good rebound. I hope it's hopefully that everything's over. So this is me on Alibaba. This is me on my stocks findings today. I hope you enjoyed this video. Please click like and subscribe. Hopefully to see you tomorrow.